Good day, everyone. Thank you for joining me today. My name is Cardine Williams. I'm a CPA, an insurance broker, as well as a real estate investor, a property owner. And today we're going to talk about safeguarding families and building generational wealth. So, home ownership is a huge milestone that if you haven't got there yet, you are definitely working towards. But what happens if life throws you the unexpected? Today, we're going to explore how insurance and real estate strategies can protect families and create stability and build generational wealth. First, for existing property owners, mortgage insurance. Mortgage insurance is tied to your mortgage balance, which means that the coverage reduces as your mortgage balance reduces. This protects the lender. The payout doesn't go to your family. Instead, it goes to the bank. It's not portable. So should you change lenders and properties, guess what? That coverage goes away. It typically runs a bit more expensive than actual term insurance. So just understand that when you applied for your mortgage and they asked you the question, do you want mortgage insurance? And you said yes. That was it. There were no questions asked, which signifies that you weren't pre-qualified for this coverage. It's post-claim underwritten, which means it's at the time of a claim that's when they'll assess whether or not you are qualified for that coverage, which means you run the risk of not actually having a payout. Understand too that your premiums do stay the same even as your coverage amount shrinks. Once that mortgage is paid off, there is no more coverage. So tell me, how does that make you feel? What does that mean for you and your family? I would recommend instead exploring personal life insurance options. Go out and get a policy that you own so you can determine the coverage amount so that it not only covers the mortgage, but also addresses other family needs. You can determine who are the beneficiaries and the funds paid directly to those beneficiaries. This coverage, you own it, so it's portable. Whether or not you change your property or your lender, you'll still have this coverage based on the contract terms. And just for added security, add in other insurance solutions to ensure that if something happens to you, whether a serious illness or injury, you can still pay your bills with that type of coverage payout. So whether you're a homeowner or you're renting, ensure you put proper coverages in place to ensure that you're able to pay your bills, your rent, your mortgage, provide for your family, and also potentially cover future needs, whether it be education or lifestyle needs. Make sure that nobody has to go and work multiple jobs or sacrifice their comfort. What does that mean for you? I'm sure it provides you with more peace of mind. So the fun stuff, wealth creation and generational wealth creation. Right now, I know most families feel cash strapped, especially if you recently did a home purchase. And for some owners, when later on in life, they find themselves house rich because the mortgage is paid off, but they're still cash poor. And when that real estate that you've worked so hard to acquire, when that day comes, when that final bell rings for you, guess what? Your loved ones, if it's an investment property, are met with a significant tax bill that they have to pay, and they might be even forced to sell that property. The solution right now, give your dollar multiple jobs. Allow it to protect your family, allow it to protect the assets that you've acquired through your hard work, and help you also to create wealth. Add another leverageable asset that allows you to fund your lifestyle as well as can be incorporated in your retirement plan. Use the best wealth transfer tool there is for generational wealth. The death benefit payout goes to your beneficiaries tax-free. This is an equal opportunity tool. If you qualify, whether you're a homeowner or not, you can leverage life insurance and other tools to ensure that you create a lasting legacy. So why do we love real estate? One, it grows, it appreciates, but that growth is subject to capital gains once you've sold it. It generates income, rent, but guess what? That income is also 100% taxable. You're able to leverage it. Great, because it allows you to access even more wealth. But guess what? That debt needs to be settled at some point, and you could be forced to liquidate some of your assets to do so. For the same reasons, you will love cash value life insurance, but guess what? It doesn't have the drawbacks. So you can grow, and that growth is tax exempt. You can access cash, and there are ways to access that cash tax free. You can leverage this asset without the hassle of the paperwork that goes with it typically when you leverage real estate. And guess what? When the final bell rings, that wealth, that legacy transfer goes to your heirs, your beneficiaries, tax free. Not to mention that the seed money required compared to real estate investing is minuscule in order to start building wealth inside of your cash value life insurance policy. That's great news. So, life story for homeowners. There's one scenario where the family, they've purchased this property, they didn't look into personal life insurance and decided to get mortgage insurance instead. But one partner had a pre-existing condition, and guess what? It wasn't revealed through application process. If passing happens prematurely, that could cause the outcome of no payout, which means the family is left with a single income and might find it very challenging to carry that mortgage alongside the other expenses that come with passing and living. So at the end, there could be no home, no money, and no legacy. Another scenario, these homeowners, they work so hard to pay off their mortgage on their primary residence. Now they're house rich, but cash poor. They still don't have that liquidity to meet their living expenses in retirement. They are then pushed into the situation where they have to do a reverse mortgage to access that equity outside of their home. But when that bell tolls, what happens? The house has to be sold to pay off that debt obligation, or the kids, the beneficiaries, have to take out a mortgage on the property just to keep it. So the choice that they have is no real estate or a legacy of debt. The other scenario, we have these real estate investors that manage to acquire properties personally, or they hold them in a corporation. But guess what? This bill has to be paid at some point or the other, at death, or based on the 21-year rule. If its assets are held in a trust, there will be capital gains tax to pay at some point. The situation is they could be forced to liquidate a portion of their real estate portfolio just to pay the capital gains tax. So guess what? There's a loss of wealth to taxes. How do you address the situation? Let's look at the alternative. When you have individuals depending on you, your family, your kids, a spouse, parents, you want to make sure that you put protection in place, life insurance, critical illness, disability coverages, to ensure that if something happens to you, your assets and your loved ones are protected. But guess what? You can take it up a notch. You can turbocharge this thing by leveraging cash value life insurance. And we have a couple options for that. What that does, whether you're taking a portion of your paycheck, say 10%, or you're taking a portion of your rental income, or you've accessed equity inside of your property, you can stash it inside of your life insurance policy and it grows tax exempt. And remember, with that death benefit coverage, you instantly add to your estate value. As part of your life insurance contract, you have easy access to funds by leveraging that policy for, say, a policy loan. And this allows you to quickly respond to opportunities that may come up your way. There are also strategies whereby once you've built up this equity over time, that's the cash value inside of your policy, you can access it using different methods, tax-free, to help you fund your lifestyle, as well as maybe incorporate into your retirement plan. And as I said before, you can't escape death nor taxes in Canada. So at one point or the other, you will have that terminal tax to pay. And instead of being forced to liquidate assets, that payment could come from a life insurance policy, and the excess could go tax-free to your beneficiaries. And you know what? The proof is in the pudding. Here I have snips from real life existing policyholder statements showing how you can build wealth. And in these examples, this is a universal life policy inside of your policy. This, you don't have to fix a leaky roof. You don't have to deal with tenants. You are able to create wealth passively and tax efficiently inside of your life insurance policy. The insurance industry is a big tax shelter that you should choose to maximize. And if you look at the growth, this is not something to sneer at. With this policy spans almost 20 years. And if you were to calculate the return in this policy, it averages over 10% growth tax-free. While results may vary, this is, again, a very good option to grow your wealth. So my advice to you is take control. Protect your family. Make sure that the what-ifs are covered so you can move through life with more financial resilience and confidence. With confidence, you're more open to opportunities that might come your way. And guess what? This policy, invested inside of your life insurance policy, depending on who the owner and the beneficiaries are, could provide you with greater asset and creditor protection. As I mentioned before, this allows you to easily access money in different ways, whether it be a policy loan from your insurer or a collateral loan with a third party, by presenting this asset that you've built to that lender as security. Leveraging a policy loan doesn't show on your credit score, doesn't show on your credit report, nor impact your credit score, and you have control over your payments. It is unstructured and determined by you. This can provide you with support for your lifestyle, cover emergencies, as well as allow you to pursue opportunities as they come. Tax shelter. They say it's not what you earn, but it's what you keep. Use this as a tool to ensure to minimize the future taxes paid on your dollars. This is definitely a good way to eliminate the impact of taxes and accelerate the growth of your investing. Retirement is a big deal. It represents 20 to 30 years of your life that you need to fund. Be more self-sufficient by leveraging a tool like life insurance, cash value life insurance, to help you ensure that you don't outlive your money and gives you access to cash that won't impact benefits. Should you want more information to have a deeper conversation about how this might work for you, feel free to reach out to me. I'm happy to help.